Let's change tracks. We have another guest waiting by. Sanjiv Goenka, Chairman, RP Sanjiv Goenka Group joins in. Sanjiv, great to have you on the show. Thanks very much for taking out the time. The company had a commodity tag status earlier, but has now overcome that as a structurally superior manufacturing company making specialty grades of carbon black. Is the transformation complete, and what's the next leg going to look like?
Well, quite honestly, this is something that we started working on about 2-3 years ago, when we realized that we have to move away from commodity blacks. So now this year, as a percentage of sales, our non-rubber blacks will be 10%. Last year was 5%, before that was maybe 1 or 2. And for March 19, our true specialty sales will be 31,000 tons. So this is compared to about 15,000 tons last year and about 7,000 tons the previous year. And we are adding more and more capacity on this. We are adding more and more technology, more and more products, and this is the way to grow. Secondly, the part of the transformation journey has been in terms of improving efficiencies and yields. So we've improved efficiencies across every operating parameter. In the factories, in the procurement, in the logistics, in the just-in-time supplies, in actually palletization, in transportation, and I think it's a different company. It was a difficult decision 3 years ago when we changed the entire management at the company. Every functional head, the CEO, everyone was changed, and that change is bearing fruits today. The company has improved significantly. It's beginning to lead on all operating parameters across the industry. Today at 5,15,000 tons, we are the largest carbon black producers in India. We are adding 80,000 tons in Mundra and Palej, which will be operational in the next 9 to 10 months. And we are looking at another 1,20,000, 1,50,000 ton capacity at South India in Chennai at a cost of about 500 crores.
You know, the industry report suggests that you're poised to grow carbon black volumes at 9% and revenue in high teens over next couple of years. What are you aiming given demand from tire, plastics and paint industries?
Well, whether it's 8 to 10 or 7 to 8 or 9, 10, I think growth is robust. As far as we are concerned, we are sold out on capacity, and we will continue to sell our full capacity. We will produce and sell. So I think things look good for us. We expect margin improvements from our shift in product mix, shift from rubber blacks to non-rubber blacks, from commodity blacks to specialty blacks, then with our addition in capacity. And our debt equity is already down to 0.6:1 for March 18, and it will go down further despite 800 crores of capex. And the effort is to reduce debts, reduce interest, and focus more and more on productive investments, on high-yielding investments, and investments that are going to be more remunerative than the existing ones.
Right. Mr. Goenka, you know, since crude oil is a key input for your products, its higher price coupled with the rupee depreciation, I'm guessing would weigh on your blended margins. How is it that you see your EBITDA ranging this year, even as the share of specialty grade carbon black does actually increase?
Well, frankly, I think our margins have been maintained, and if anything, slightly improved in the first couple of months of this year, and that is when the crude price has been at its highest in the recent past. So I think we don't really anticipate at this levels for it to impact margins. And anyway, I think we have an understanding with the tire industry that as far as price increases or decreases are concerned, they are taken over by the tire industry. So we really don't get the benefit of a reduction. We don't get the hit of an increase. Again, another thing that we've done is we've shifted to a just-in-time kind of supply. So we really don't speculate on booking crude in advance or not. So we only have crude exactly what we need for production. So it's literally like a just-in-time kind of a thing. So whatever we need immediately is what we have. So there is really no inventory gain or loss on crude.
Okay, let's talk about Saregama then, because you've staged this mega comeback this year by riding on Carvaan, a preloaded retro-looking musical device. How is this really helping growth?
Well, Saregama has reinvented itself. I think it's been a very satisfying journey. Our idea was to actually create a disruption in the delivery model, in the product itself, because everything about music had become digital and wireless. And so we hit upon this idea of Carvaan. It's been a runaway success. We were doing 50,000 sets a month. I think as we go on, we expect to get to close to 1 lakh sets a month. And we can do 1 lakh today, but we are constrained by the production facilities. We are really not constrained by the market. The response has been absolutely phenomenal. The other day, somebody told me that at the Zurich station, he saw somebody selling Carvaan. They were peddling it as Indian music innovation. But it's great to know that even individuals are now buying and trading. Obviously, there is a market which is emerging. People are using it as gifts for their parents and grandparents. And that is what we had expected. And it is traveling not only to urban India, which is the beginning. Now it's going to rural India. It's going outside the country. It's going to UK. It's going to USA. So I think Carvaan has been a great hit. And we expect Carvaan volumes to grow significantly as time goes on.
No, indeed, India is making its mark globally, not just on the economic front, but culturally as well. Things are really picking up in terms of Indians making a mark. So, just extending that thought out, what are the plans in place to monetize this vast library of songs? I mean, how do you see the story going forward?
Well, I think what we are doing is on the digital platforms, we are already increasing our viewerships, and the monetization that we get, for example, from YouTube has gone up twice over the last couple of quarters. I think things are improving, but yes, we have a huge IP. The idea is to capitalize upon that. Carvaan is one such idea. You will see more ideas as we go on. I can't speak more about them at this stage, but you will definitely see more Carvaan-like ideas which we have worked on already.
Okay. And what about the power segment then? What are the big trends that you're seeing for the sector and where you would be placed?
Power sector, yes, of course. I don't really want to speak much about CSC at this point in time because I think we are not really supposed to be speaking. It's some kind of a silent period or something, I'm told. But yes, the power sector looks good. I think you will see a revival in generation. You will see a distribution, privatization impetus and franchises being awarded in different states. And most of the private franchises have actually done well. So I think yes, the power sector looks definitely much better than the past.
All right, Mr. Goenka, we'll leave it at that. Thanks very much. It's been an absolute delight speaking with you regarding your business plans. We really appreciate you being candid about it.